I work for the European Commission, but I would not want you to attribute what I'm going to say to the Commission as an official position, because we are still a little bit in the dark as to where we are going. So my remarks will be speculative, and I think there will be other speakers who will also be speculating a lot about the future of payments. Ever since I took up my job as head of unit in charge of retail financial services and payments just over a year ago, I've been desperately trying to find a crystal ball that would give me a glimpse of the future of payments in Europe. Obviously, I didn't find it. There's an alternative, and that consists in looking at some countries or parts of the world that seem to be ahead of the rest, like some parts of Africa, where SMS-enabled mobile phones are widely used for payments. Or, less surprisingly, China, which also moved very rapidly into the world of mobile payments. And we have, of course, also interesting developments and innovative countries within the European Union. Take Sweden, which is rapidly becoming cashless, and where the Riksbank is now looking at the possibility of issuing electronic central bank money, the e-krona, which could make Sweden the first country with its own cryptocurrency. Another way of trying to find out more about the future is to ask some key market players. I keep doing this, but I don't get definitive answers. Just a response that market players are keeping a range of options open, for instance, through acquisitions, as in the case of MasterCard with VocaLink, for instance, a key player in instant payments, which I would regard as a major threat to the traditional card payments model. Maybe at the end of the day, we will have a clearer idea of where we are heading, but one thing is clear to me, in any case, big changes are imminent. You spoke of a revolution, and I think it will be nothing short of a revolution that we are seeing in the area of payments, and I see three big drivers of change: regulation, standardization, and technology. Let me start with regulation. The second Payment Services Directive represents a major breakthrough. It opens the payments market to new players, thereby enhancing competition. And at the same time, it prohibits surcharging, putting further pressure on revenues linked to payment services. PSD2 also seeks to enhance trust in electronic payments by making authentication and payment authorization processes more secure, and by limiting the liability of consumers when something goes wrong. Without trust in electronic payments, the future of payments will be pretty much like the present for many years to come. We will, of course, discuss PSD2 in more detail in the second panel, but let me just add one other point about the disruptive potential of PSD2. It gives access to payment accounts to third-party providers, payment initiation services, account information service providers. And so far, these third-party providers have been fintechs that compete with banks, and banks have tried to put obstacles in their way, fearing that the banks might lose their direct contact, their direct relation with their customers. I think banks are now reassessing the situation and start seeing open banking as an opportunity for themselves. They can, of course, provide payment initiation services themselves, and they can aggregate information from many accounts, including with their competitors, and put that into their own online banking interfaces to provide more convenient services to their own customers. They can also do something else. They can offer a playground for fintechs which develop apps that greatly enhance the possibilities of one's bank account. Banks would then provide the equivalent to the iPhone, or some banks more an Android phone, and fintechs make the smartphone really useful and desirable, thanks to the fancy apps they are building around this platform. That will not appeal to everyone, but it would allow banks to reach out to young customers in particular. Let me move on to the second big driver of change: standardization. I mean by this efforts outside the regulatory sphere that contribute to a better interoperability of systems. Examples are the SEPA schemes, and the latest of these SEPA schemes is, of course, the SEPA Instant Credit Transfer Scheme, which went live in November. As a complement to this, the European Central Bank will provide an infrastructure for low-cost instant payments, the Target Instant Payment Settlement Service, TIPS, as of November this year. But we already have an infrastructure which is running. EBA Clearing has gone live with its infrastructure solution for the processing of instant SEPA credit transfers at a pan-European level. In November, the Commission adopted the regulatory technical standard on strong customer authentication and secure communication under PSD2. It is still under scrutiny in Council and Parliament, but we are confident that we can publish it in the official journal in March. This RTS does not mandate standards for communication between banks and third-party providers, but it creates very strong incentives to move into that direction. Market players, banks and fintechs are now working together to review different API standard-setting initiatives to make sure that these API standards meet their business requirements and allow them to comply with their legal obligations under PSD2 and various other pieces of legislation. If we do get standardized APIs for accessing payment accounts, we will greatly speed up the development of new services in the area of payments. Just think of the possibilities. Today, when we make electronic payments in a shop or online, it is very complicated to ensure that the payees, mostly merchants, actually get the money. They need assurances that the money will eventually arrive in their account, and then they can release the goods or the services to their customers. Payment service providers have developed sophisticated systems to provide such assurances to merchants and to define who is liable if something goes wrong. All this to mimic the instantaneity of cash payments. With instant payments, the systems can become much more simple and straightforward. And that should also drive down costs, with merchants having to pay less for the payments they receive and hopefully passing these savings on to customers who can benefit from lower prices for goods and services. It remains to be seen how these instant credit transfers will be done in practice. There is still a need for service providers on the merchant side who probably don't want to check all the time in their mobile banking app whether they have received the money and can deliver the goods. For consumers, the change may be much less visible. For instance, cards could be used to trigger an instant payment, just like they trigger payments today. Let me move on to the third driver of change, technology. The developments made possible by regulation and standardization are of course only possible, can also only produce their benefits thanks to technology. And payments are processed through IT systems, and this has been the case for many years already. So banks regard themselves as fintech companies themselves. Some of the IT systems are of course quite old, which poses some problems with batch processing and so on, which we have discussed at length in connection with the RTS, where fintech providers had special requirements as a result of this. But I would like to say a few words about other technological developments. We see, for instance, interesting innovation in biometrics, which should allow new and more convenient ways of authenticating ourselves when making payments. PSD2 provides for such innovation by leaving it open what elements are combined in strong customer authentication. The increased use of smartphones in payments creates new challenges, however, especially if the two factors for authentication are processed through the same device. The other important development is artificial intelligence and the ability to extract value from data. I expect that we will have major debates on what is possible under our regulatory, within our regulatory framework, which includes not only PSD2, but also the General Data Protection Regulation, which will enter into force in May this year. And then there's also the question, what is acceptable to consumers? Because what may be allowed may not necessarily be what consumers want. This will also be a major determinant of who will be the key players on the payments market of the future. Let me finish with a question that will be decisive for this future of payments in Europe. How can one make money with payments? There are many different business models. Today, the predominant business model, as I see it, is charging merchants for the payments they receive. This source of revenue might dry up to some extent as a result of instant payments and the arrival of new players doing payment initiation, for instance. So what other possibilities are there? One can offer services that are linked to payment instruments, for instance, credit lines or various types of insurance. And merchants can be offered services to manage payments. Convenient payment options may also be offered to facilitate the sale of certain goods and services to gain a competitive advantage over competitors. So it would be bundled with other products. Very large retailers might offer payment solutions similar to Alipay in China. And there's one last business model which is often mentioned: free payment services in exchange for your data. As I said before, this will be a decisive debate for the future of payments, and I'm very keen to hear the views of panelists and participants.